Hey everybody, I don't know about you, but as you've watched out over the world, the war in Russia and Ukraine is not just isolated to Eastern Europe. It's spread all over the world, and you can see it in market instabilities. You can see it here. People who do not think that that war is affecting you, all you got to do is look at gas prices. You look at your food prices. You see the global change that has happened. But you know something that's also affected investments as well. And I've said all along, Legacy Precious Metals is your navigator. They're the ones that see you through to get to the next level. The good news about this is even with market volatility, market instability, you've got options. And gold prices are rising as investors turn to gold. And gold presents a hedge against this inflation and that protects you against the weakening dollar, which we are seeing. Legacy Precious Metals is the only company I trust to deal with gold and silver and the other precious metals. You need this investment. You need this as part of your portfolio to keep you buffered from what we're seeing in the world. War and volatility in the market. This is where you need to be. Call Legacy Precious Metals today. Be proactive about this. Get on board with it. Call them at 866-528-1903, 866-528-1903, or you can download their free investor's guide at legacypminvestments.com. legacypminvestments.com, your navigator in a volatile world of investments.
You want to listen to a podcast?
By who?
Georgia GOP Congressman Doug Collins.
How is it?
The greatest thing I have ever heard in my whole life.
I could not believe my ears.
In this house, wherever the rules are disregarded, chaos and mob rule. It has been said today, where is bravery? I'll tell you where bravery is found and courage is found. It's found in this minority who has lived through the last year of nothing but rules being broken, people being put down, questions not being answered, and this majority say, be damned with anything else. We're going to impeach and do whatever we want to do. Why? Because we won an election. I guarantee you, one day you'll be back in the minority and it ain't gonna be that fun.
Hey everybody, it's Doug Collins. Welcome back to the Doug Collins Podcast. You know, I've been getting a lot of pings, a lot of questions, a lot of folks wanting to know about this FTX issue, the crypto. We've had, information on the podcast before about what cryptocurrency is, what some of this stuff is doing and how it goes back. But then all of a sudden, here we have what is being described by some as bigger than Enron. I mean, Ponzi scheme gone wild. I mean, you name it that's been out there. So I've had a lot of folks ask me, just say, let's find out what's happening, how is it happening, and what can we do? So, when I do this, folks, I go to the experts. I go to the folks who can give you the best answers. And John Berlau is here today, Competitive Enterprise Institute, to give us the lowdown. John, it's good to have you back on the podcast.
So good to be on, Doug. Thank you for having me. Happy Thanksgiving.
Happy Thanksgiving. We got some good stuff going on here as we go. Okay. Let's just start off as we do a lot of things when it comes to, again, to this issue of crypto, this issue of a lot of things that people are they beginning to know about, but they don't know about. Start us off with basically what FTX was, how this got, mixed up with this this gentleman who is very interesting in his own right. How did this all come about?
Well, FTX had built itself in a very short time into one of the largest crypto exchanges in the world, based on, as we now know, questionable, basically, a false picture. I will say that of its assets in large part, and was affiliated, and this is important because of the funds going back and forth, also with a trading firm called Alameda Research, both founded by Sam Bankman-Fried, who is, I think he may have just turned 30 this year, but young guy, sort of wonderkin, sort of like, a little bit like, this story is a little bit like Elizabeth Holmes, of Theranos, where people were just oohing and eyeing, and he was able to charm wealthy investors. He and FTX became became just a presence in Washington and elsewhere, with naming rights for stadiums, the Super Bowl commercial with Larry David that ran last year, involvement of other celebrities, and he became a presence in Washington, and because he's a Democratic donor. And he was also making the case for more and this is what I find ironic, comic if it weren't so tragic, that he was a lobbyist for more extensive crypto regulation that his competitors said, the type of regulation he was championing, and I think there's some credence to this, would have given FTX a monopoly. But then when there was a report in the crypto news site CoinDesk, both about allegedly unauthorized lending of billions of dollars to the trading firm, in his name, Alameda Research, which, hadn't been disclosed to investors as well, the investors there, as well as to the crypto customers, and the fact that they were basically using FTX's own native token, which when it was created, it wasn't something that traded independently like Bitcoin, as its asset, and valuing that asset to billions of dollars. It caused the rival firm Binance to sell that, which led to a run, which led into a collapse in value of that token, which led to withdrawals from the FTX exchange. And it, within a matter of days since the CoinDesk report, FTX filing for bankruptcy. And its new CEO, that's like a restructuring expert CEO, when Sam Bankman-Fried resigned, said he's never seen in his life financial statements so unreliable. And he was involved with Enron.
Right. Well, let's break out what you just said before. Let's just break down into parts, and then let's get back to the whole. Sam Bankman-Fried. I mean, let's start with him. And I love your analysis there with the Theranos issue, which, by the way, I think is we are taping this is getting has been sentenced to prison time and all for what was going on with that. But I think it's an interesting analogy. How did someone of his age, and I'm not taking back from age, I think I got no problem with somebody with great ideas. I don't care what your age is, making a lot of money in this. But how did it go in especially an industry such as this? Besides the Democratic donor base, besides some of the other stuff that they were throwing out a lot of money at places. One, how did he gain the money? I guess is a thought that many people have. And then how did it become so quickly marketable in the political world? And then, because there's reports that, this issue has, Ukrainian legs back to Democratic donors. I mean, there's just all kinds of things going on here. Give us a little insight about him if you can.
Right. Well, he is a pretty book smart guy, and also smart at making social connections. But there's a saying, knowledge doesn't even equal wisdom. But it also certainly helped the fact that he had prominent parents that his name is Sam Bankman-Fried. Barbara Fried headed a Silicon Valley PAC that gave to Democratic donors, and also his father, Joseph Bankman, helped, according to Fortune, draft tax legislation for Senator Elizabeth Warren. So, I mean, basically, Kevin O'Leary, Mr. Wonderful on Shark Tank, said, well, of course I trust him because his parents are compliance attorneys, but something to the effect, I'm paraphrasing, what could go wrong?
Yeah, that's like trusting the baker with all the ingredients and never watching, because nobody ever would think the baker would put something in there,
Exactly. Trust but verify, as Ronald Reagan said, in everything, in politics and in business.
I love it. Well, I mean, he gained this, and then we bring into account this Alameda group as well, that in which he was funneling off money, however you want to put this into this. But this also lends itself to a really different part of this, because the Alameda group was headed by a young lady who had a relationship with him. I mean, this can't get any more confusing, especially when you get into this, quote, polymorphic couples. I mean, did anybody just see this, or did all this just come to light recently?
Well, people did see it. This is the thing. The FDIC, Federal Deposit Insurance Corporation, warned them in August, but this is the bank regulator as with deposit insurance, that they were deceptively advertising that their accounts had deposit insurance. That should have been a warning. Also, short seller Mark Cohodes was saying, things like in August that nothing fits here. Here are, 10 guys in a commune in the Bahamas running like, a multi-billion-dollar financial exchange. So yes, there were a lot of things there, but I mean, one of the other things that Sam Bankman-Fried did is he wrapped the FTX in environmental and social governance mantra, where they were talking about being carbon neutral and favoring coins that, like with what's called proof of stake, that supposedly wasn't as much the harmful to the environment. So he wrapped himself in there. So it's clear. I mean, I've written about other ESG firms that are being shorted, that ESG can be a mantra for environmental and social governments, can be poor financial governance. But the SEC at the same time, when they had warnings about this, were instead trying to make companies disclose how ESG or woke they were, in pushing things that had nothing to do with fraud. At the same time, this fraud apparently was raging at FTX.
Well, on a quick detour here, because you brought this up, and I was just reading this morning. This environmental governance issue that we're talking about here, ESG stuff, there's a lot of concern among Wall Street right now, especially going into directors meetings and elections of directors, and some of the rulings that they can't block the groupings of, here's the directors that the company is pushing, here are the ones that the activist, if you would, push. Is this something that, again, and it sort of branches off from what Sam Bankman-Fried was doing, is this a concern on it, or is it just mainly just fear of companies, but is there a real concern that activists and others who are pushing these agendas could get footholds on some of these large boards, bank boards, and others?
There is a real concern, and it's going to be on top of Sarbanes-Oxley and, which the regulations that were rushed through after Enron, which I've, written about, I'm going to talk about earlier, and Dodd-Frank. It's going to mean less companies, go public in the first place, or only go public when they're very big. And who loses out from that? Mom and pop investor. And again, these agendas are going to be at the expense of the financial well-being of Joe and Jane 401k. So it's kind of two sides of the same coin. The SEC allowed fraud at an ESG firm apparent fraud at an ESG firm like FTX to fester, and they're encouraging all these agendas that harm investor return.
Well, and I think this brings us sort of to this concern. Let's just say, before we get into where it's headed, if you were using the FTX, or you were invested in FTX, or there was things, basically, are you just out now? I mean, because crypto is fairly new, blockchain, all these others, they're good things about what's going on there. But then there's also the concern of what it's backed by, what it's not backed by. Where are you at if you were part of this? You just bought into the hype, so to speak.
That is a very good point. And it's interesting, we talked about Elizabeth Holmes and Theranos. Not every fraud causes contagion to the rest of the economy. I mean, Elizabeth Holmes, her investors were well to do anyway, since it was a private company, although there may have been some pensions invested in it, lost, but it really didn't cause harm to the larger economy. What really tends to do that, ironically, is sort of the rush to either bail out or regulate, when you had it in the financial crisis, when Bear Stearns got a bailout, everybody expected a bailout, and then Dodd-Frank was rushed through, Sarbanes-Oxley after Enron. So from what I've been told, or what I've read, FTX, there was a pause of withdrawals, but now, I mean, that is resumed even in bankruptcy. Although there are different reports of that's what's going on. Some other websites, with exposure because of panic, have temporarily paused withdrawals. But generally, the crypto market itself has stabilized. It fell about 20%. Bitcoin was trading at 20, went to 16,000. It seems to have stayed there. There have even been a couple cryptocurrencies that have risen, like the spinoff of Bitcoin called Bitcoin Cash. It's actually gone up slightly in price because of positive developments there since the FTX bankruptcy. So just like Madoff didn't mean you should sell every stock because the stock market was inherently corrupt. I think cryptocurrencies have been around for 15 years, and you can't predict, just like you couldn't predict, with internet companies which one would succeed, but they're going to be around somewhat. So so it hasn't. I don't think it's unless regulators make a misguided attempt and legislators make a misguided attempt to do something, I don't think it's going to really tank the whole crypto market. Of course, I'm not offering financial advice here.
Well, exactly. Neither one. We're just saying here's what's happening. Well, it brings up an interesting question, okay? Because a year ago, if you just look back on the the year-to-date charts, and whether you're just a simple investor on TD Ameritrade or anywhere else, you can look at the crypto charts and you can see that last year at this time, Bitcoin itself was 60,000. It's now 16,000. Right.
And last year at this time, Facebook was 350, and now it's trading about $100. So both stocks and cryptocurrencies have had a steep decline.
Well, and I think that you made a great point that just because of the results of one doesn't carry the results of all. But the curious question here, though, is opposed to, say, a Facebook stock, which has thousands of other stocks out there, of similar like and kind, if you would. Crypto is still considered new. Crypto is still considered. If you ask a man on the street, 10 people, I would be amazed if you got 4 people that actually understood crypto in Bitcoin and others and the markets, how it works to start with, possibly less than that. I understand what you're saying about it not affecting others. But the reality is, I think for newer investors, for those who are looking at it, don't you think this could actually affect? And if not, have we settled a little bit? I mean, maybe, Facebook shouldn't be at 300. It should be at 100. Maybe Bitcoin shouldn't have been at 60. It should have been at 16. Where do you see that?
I think the big issues, going up and down generally, stocks and cryptos going, will go up and down, and that really isn't an issue for it's an issue for maybe an issue for the individual investor. That's why it's important to diversify, but it's not an issue for public policy. One of the issues with cryptocurrency is that with exchanges, just because of the way the law is structured, you don't have the same rights as far as being able to access the crypto at whatever value it is. Some exchanges are now doing things like proof of reserves, but generally if they go bankrupt, you're like an unsecured creditor rather than having access to that. And there are things that can be done, like allowing banks and trust companies to offer trust accounts where there is what's called segregation of assets. But generally now the choice is either doing that on an exchange where there are less controls about what they do with customer assets. And as far as legal rights, and or holding it in a wallet, what's called a cold wallet, digital wallet, where you don't have the risk of the exchange losing it or going bust, but then you have other risks like remembering your password, a very long password. So if there was something, and in a way, part of that is the SEC's and other regulatory agencies' fault for not approving things like trust accounts, like exchange traded fund that could give people a less risky exposure to the sector, and they have in other countries like Canada.
All right. Well, then that brings us to this, this second. We've gotten here. I think you're going to see more and more as the bankruptcy, now head of the company basically saying he's never seen anything this bad. And I think we're going to hear more and more of the extracurricular, everything going on at FTX, Alameda, the rest of it. But this brings us to I always like to try and have okay, here's the problem, but what is the future? And this brings us to, I think you and I both would agree, to a concerning point. Is this a point you just pointed out that there were some things the SEC could have done, prior to that could help in this area of Bitcoin and with the chain, with the exchanges, but also there's going to be a very hard look, as you well know, from DC, because the only thing they can do is pass something to, quote, make it right. What's the concern now that the bad actor of FTX now brings in the government to make it worse?
I think that's a very strong concern, and it's actually a concern for the market too, because that government regulation, if you outlaw a certain type of crypto or an exchange, that can help or spread or fuel contagion. So that we should learn, hopefully, from the rush after the Enron and WorldCom implosions with Sarbanes-Oxley, that made it so much harder for smaller companies to go public and mom and pop investors to grow wealthy with them. Bernie Marcus of Home, that started was able to go public in the 80s with Home Depot, they had just 4 stores, and he said that would be impossible now, and that he may have never been able to get Home Depot off the ground, and that he was able to go public when they were just a 4-store Georgia chain. So we kind of don't want cryptos or the use of blockchain, which they can provide. There was, for instance, a conservative website called Odyssey that was putting up some of the videos that YouTube censored and used a token, and the token called library, and the SEC spent its time, going after that and not even alleging fraud, rather than because it said it was an unregistered security, rather than time it could have been looking at FTX. So enforce the laws that they have. I think other things, there are just long things as far as disclosures could be improved, certainly, but also having enabling things that would make it actually safer with consumers, that would have guarantees, like being able to put crypto in a trust account at a bank or trust institution in the same way you put your jewelry in the safe deposit box at a bank, or having like an exchange traded fund like for gold or stocks, where the others would have a contractual obligation to keep custody. Having that and improving that, rather than just having a rush to regulate. Enforce the laws we have now, and look at what updates are necessary. But I mean, SEC had ample authority to go after FTX simply because of the fraud against its investors. It's even though it wasn't a publicly traded company, in the same way that it was able to go do that because of the defrauding of the private investors in Theranos.
It's interesting to me here, John, and this is, Machiavelli's famous quote was that there's never more interesting, anything more perilous or intrepid than the introduction of new things. And this would be, crypto, blockchain, however you want to do it, is still, even those that understand it, they get it, but for the vast amount of Americans and the world, for the most part, they don't get it. And most of us are still learning when it comes to this. And I think that's going to be the key is what, because I mean, you had, what was it, El Salvador basically turned almost everything over to crypto, and now they're really, having a struggle through Bitcoin because of, the price that it once was, the price that it is now. I mean,
Well, now, I mean, he's the president is still, resolute. He's going to say he's going to buy a Bitcoin a day, and that's going to boost his treasury. And he's been popular there. I may not have done it perfectly, but that's so. I mean, people are still seeing that as an asset. So
what in going forward? I know the trust accounts, other things. What's the fear here? Do you fear that the SEC, because there was a lot of concern from Friedman himself, who was, Fried was looking at, that he was looking more for regulatory burden that would make him a monopoly. But there is a lot of concern in this regulatory space that there is needed to an extent, but not to stifle the innovation to do. Is there a middle ground to be split here?
I really think there is. Well, one of the middle ground is just that investors should be protected from fraud and not protected from risk. I mean, I would say there would be a middle ground where you would give you might give an agency like the Commodity Futures Trading Commission power over exchanges in return for limits to the SEC's power, which I argue the SEC is exceeding its power, right? But I mean, the legislation in Congress now from Senator Stabenow, Democrat, and Senator Boozman, Republican, which Sam Bankman-Fried championed, would give the CFTC that power, but still, let the SEC rage. So I think that really needs to be fixed before we rush into it. And we certainly should wait, not do anything in the lame duck, and wait until, the voters' wishes are realized when the new Congress convenes. But one of the things I have been warning about since 2019 that could set a bad precedent, not just for crypto and other sectors, is the SEC. Most cryptocurrencies don't offer a promised return on investment or a share in a company. They just, it will go up in value the same as any, like collectible or other things. The SEC, starting with Jay Clayton, President Trump's appointee, who was a disappointment and frequently clashed with other of President Trump's appointees on there, but accelerating with Biden's appointment, Gary Gensler, is taking the case that most cryptocurrencies are actually securities simply because they will go up or they're bought as investments. Well, you think about that, a lot of consumer items are bought as investments. So our comic book securities, our baseball card securities, our gold coins. And now that you have what are called non-fungible tokens that would sort of validate like a collectible comic book or piece of art, then that's an issue, because the SEC, it could be a power grab over everything.
Right. And never to be put aside from that part. Sort of last thing as we look at it, does this go back to just, and there's always the issue of due diligence. Everybody, you hear it in, your investments, always do your own research, always do this kind of stuff. Was there any way, because this cast of characters, there is a TV movie, or a full length feature film waiting to be made about this. At some point in time. Was there really any way, when you look at the 10 of them living together in this interesting relationship, Alameda being run by basically what now appears to be someone completely incompetent of running an investment kind of firm, was there any way for me or you, and especially I would say me, because I'm completely, out of the loop, to have done what we would have normally called due diligence?
I think there would be. One of the ways that you should watch is, I think, Enron proved this. Many other things. The subprimes is, pay attention to what the short sellers who have their own money are doing. In this case, I had mentioned, in Enron you had shorts like Jim Chanos warning about this, and in this case you had Mark Cahodes, as early as August, probably maybe before then, saying this, doesn't make sense, and he was shorting companies that were publicly traded companies that were involved with this. So pay attention. Look at not just what the longs or the bulls, but what the bears are actually doing. And then, of course, there's always, don't have all your money in one place. There are unique risks to crypto because of the way the regulatory structure now, both in having it in an exchange and in like a cold digital wallet where you need to remember the password. You have cases with lost passwords, but just know the risks of the sector and what could happen and plan accordingly, whether to have money in different places, not putting it. Some risks are unavoidable. And just pay attention to what the short sellers are doing, and policymakers should pay attention to the short sellers. And right now, I've written at CEI.org about that. A lot of so-called green stocks, ESG stocks, are being shorted by some of the same guys. One of the same guys who shorted Enron. So that's the thing. Pay attention to the shorts, and just don't put all of your assets on one place. Again, I'm not offering financial advice because everybody's situation is different.
But it still goes back to, doing due diligence, looking at the whole market, looking at everything else. Look, this story is nowhere close to I don't think, being over. I think there is a legitimate concern that Washington and again, have been there for a number of years myself in Congress. There's a desire. It's almost like you desire to see something and you want to do something, whether it works or not, just so you can say you're doing something. I think that's become the concern that I have on situations like this as we go forward. But John, thanks for keeping us up to date here. This gets us a little bit more. I'm sure we'll probably come back in a few weeks or so and say, okay, where we're at now, because there is more to this story, and the more it just keeps leaking out is just been amazing to me.
Thank you so much for having me on, Doug. CEI.org is our website. And if I could put in a good gift for Christmas and holidays and Hanukkah and other holidays, my book, George Washington Entrepreneur, talks about how our first president in his private business dealings was very wise with money and diversified as far as, they couldn't trust the fiat currency of his day. So he put a lot of his assets in land.
Exactly. And if you want to know more about that book, you can go back on the previous Doug Collins podcast where we had John talking about that book. It's a great podcast, well worth the listen. John, thanks so much for being with us. We look forward to having you back again.
Thanks for having me on to talk about both crypto and my book, George Washington Entrepreneur.
I love it. All right, folks, that's the Doug Collins podcast for today. We'll see you next time. Hey everybody, MyPillow. I just wanted to let you know MyPillow is having the biggest sheet sale of the year. You have all helped build MyPillow into an amazing company that it is today. And now Mike Lindell, the inventor and CEO, wants to give back exclusively to his listeners. The Percal bed sheet set is available in a variety of colors and sizes, and they're all on sale. For example, the queen size is regularly priced at $89.98, but it is now only $39.98 with our listener promo code. Order now because when they're gone, they're gone. You're not going to be able to get it. These Percal sheets are breathable. They have cool, crisp feel. They come with a 10-year warranty, 60-day money-back guarantee. Don't miss out on this incredible offer. There's a limited supply, so be sure to order now. Call 1-800-986-3994. Use the promo code Collins, COLLINS, or you can go to mypillow.com, click on the radio listener square, and use the promo code Collins, COLLINS. Lisa and I sleep on these sheets every night. You will want to have them as well. They're a wonderful product. Go right now, either 800-986-3994, code word Collins, or go to mypillow.com. Also use the code word Collins to get this discount. You will not regret it.